Hi there, welcome to Your Trades. You're watching ET Now. I am Snehi Shah. This is a show where we will be summing up the entire trading action that we've seen today, everything that has transpired over the course of the day ever since the opening bell. Let's get you up to speed on everything that's happened today, and D Street has been largely range bound. We've managed to close above the 24,300 mark right now, but we've been sub the 24,400 mark ever since the get-go, and that was the range that we saw today. It was a largely range bound session. That's what we've seen on Nifty. 24,380 thereabouts is where we've ended on the Nifty. A slight bit of a recovery is what we've seen at the end from the day's lowest point, but nonetheless not much to be optimistic about. It's still a 0.3% cut is what we've seen on the Nifty 50. Let's shift focus and take a look at how the Sensex has ended in today's trading session, because at just a few minutes left for closing, the Sensex was doing much better than the Nifty and continues to do that. A 0.2% cut coming in for the Sensex. That's how the Sensex has also shut shop for the day. Let's take a look at what the broader markets were up to, because that's where the deeper gashes were being seen. Nifty mid cap, Nifty small cap, both trading with both have ended the day rather with cuts of more than 2.5%. So that's what the broader end of the market was also looking like. India Wix spiked up 5%, but has receded to a 3.5% spike. So that's also something that we've seen in today's trading session. You had Nifty Bank that was also reeling under pressure today, a 1.2% cut coming in on Nifty Bank. Names like Hero Moto, Bharti Airtel, Tata Steel, M&M, HUL, JSW Steel kept the momentum going. On the flip side, names like Adani Enterprises, Jio Financial, Eternal, Trent, SBI Life, HDFC Life weighed on the indices when it comes to the Nifty 50 group of stocks today. Let's take a look at some other sectors that are in focus. Pharma was the sector in focus today on the back of multiple headwinds coming in for the sector. We have word coming in from Trump that pharma tariffs are coming in 2 weeks. You also had Trump instructing US FDA earlier in the day to increase their charges for the examinations that they do worldwide, for the inspections they do, and also to amp up that process. So double whammy coming in for Nifty Pharma today. A 1.1% cut is what we've seen. You had the PSU banks that was in focus. The biggest sectoral loser today, a 5% cut coming in on the Nifty PSU Bank Index on the back of very weak set of numbers coming in from Bank of Baroda. A 10% decline on that stock, and overall weighed on Nifty PSU Banks, which was anyway the losing sector of the day. But nonetheless, top sectoral loser is PSU Banks for the day. Let's talk about Indian Hotels. That was under immense pressure today as well, despite outlook for FY26 and FY30 remaining intact, looking good, and numbers also largely being in line. Some selling pressure is what we saw on IHCL today. Cummins India was another stock in focus on the back of its global parent withdrawing their guidance. So that is something that has not worked out very well for Cummins India today. That stock was also under deep pressure in today's trade. Let's talk about Bhushan Steel and the latest update that we are getting from that front, because Bhushan Steel lenders are set to file a separate Supreme Court plea other than JSW Group. That is also what we are understanding from sources. It's been a lackluster debut for the new kid on the block, that was Ather Energy as well, listed at a 2% premium, but very quickly fizzled out all of those gains given the way the market was in the sideways direction today. And lastly, we're also bringing you an exclusive on Zepto, because Zepto founders are seeking 1,500 crores via structured debt, in which they will be participating with their own share as well. So that's the latest coming in on Zepto. Lots has happened in just the 6-7 hours of trading action that we've seen today. So that is what the market has summed up to be like. Stocks in focus have been Polycab on the back of numbers. You had Bank of Baroda that was weak in today's trade. Coforge was in focus. Lots of stocks were in focus. But well, let's also welcome on board now Vikas Jain, Head of Research at Reliance Securities, to better understand and get a sense of the market on what kind of action we've seen today and what we can expect tomorrow. Vikas, hi, thanks so much for joining us on the show. First up, want to understand this fall in the market, to whatever little extent it has been, was largely expected, right? Because over the course of the weekend, we've heard the government alerting on the back of those mock drills that we are expected to now prepare ourselves against. We have no clarity on the geopolitical front. Markets were expected to be in pressure, but the kind of cut that we've seen today, do you believe that we've come out of this kind of fear or paranoia rather unscathed, or do you believe there is a further leg of correction now that lies ahead of us?
Look at the structure, we had a secular amount of upward. On the higher side, 24,450, 24,500 was being a continuous pressure, and Nifty was drifting downwards over the last few days. It was failing to cross the higher band of the range. In terms of band Nifty, it made a double lower top near to 55,900, 56,000 levels. So band Nifty was the major reason where the markets, broader markets, have seen a good corrective action. So we have witnessed strong amount of sell-off in today's trade, and with the news flow boiling around in terms of drills, in terms of the FMC rate cut made, and the higher side of expectations were not being reaching higher around about 24,400. We believe some amount of muted corrective action could be seen into the next few days to test near the 200-day average of 24,000 to 24,050. So markets should remain muted. Markets would wait for the FOMC meet tomorrow. The outcome would become, and then day after tomorrow, the actual news flow would gather in space for the Indian markets, and the drill part also would get realized by tomorrow. So markets would wait for these two news set of news flow, and a breakout above sustained 24,500 would give a strong amount of positive headwind.
Okay, and Vikas, before we let you go, also want to get your sense on what you are making of the entire PSU banks basket. The kind of cut that we've seen today coming in just on an intraday basis, do you now believe that this merits a re-rating on the charts, and what are the levels that you're spotting for this index going ahead?
PSU banks almost underperformed where you look at the private banking index made a sealed a new all-time high along with the Bank Nifty. But PSU banks was trying to attempt to pause and sustain above the 200-day average. But with the state bank results coming in through in the weekend and they failed to see cheer the markets. And with today's downtick in of more than 4.5%, we believe PSU bank index should see some more amount of pressure and decline near to 5850, 5900 levels. Few more banking stocks are expected to announce numbers, so that sector would also continue to remain under pressure.
Okay, and because amid a market like this, given the way the market construct is right now, where are you seeing some pockets of value? What are some stocks that you would recommend to our viewers?
In terms of value, we look at Voltas Limited. The company has witnessed good amount of corrective action from the recent highs. It has witnessed good bounce from its multiple month average, and we believe the stock is poised for a strong move. It has made double bottom near to 1130, 1150 odd levels and witnesses a strong amount of uptick. So the results are awaited over the next few days. Q4 is a better number, so we recommend Voltas on the long side with a stop loss of 1115. And on a first target basis, it could be near to 1380 to 1450 levels. The second short we like is Cyient Limited. Post the numbers, the stock had a sustained amount of sell-off. But from those sell-off data points, it has continues to witness strong amount of higher bottom, higher positive structure in terms of it. No doubt today it has declined and is again back near to this support area. So we believe Cyient Limited can be bought as a total buy with a stop of around 1060 and a target of 1380.
So those are the stocks that are on Vikas's radar, Voltas and Cyient, both on the buy side. Vikas, thanks so much for joining us and sharing with us your market outlook and stock picks. On that note, we'll let you go. But time to keep it going from the experts now. And Rushabh Sheth, the co-CIO at Karma Capital, says that it would likely be a stock pickers market, although he adds that don't expect any big market moves in the short term. Let's go across and listen in to what else he had to say and what's his rationale on the market moves going ahead.
My sense is that it will be a stock pickers market. I think you're not going to see a big move in the market. I think it's going to be a sideways consolidating market for some time because there's still a lot of uncertainty around. Economy has slowed down, and clearly we don't see the significant recovery in the first half of FY26. I think it's only going to be in the second half post the monsoon that you'll start to see some sort of a recovery coming back, and that kind of helping earnings in the second half of the year. So my sense is that you're going to have a sideways market, consolidating market. It's going to be stock pickers market. You kind of have to pick and choose. So I'm saying from an investor perspective, it's going to be more challenging. I think staying invested over time is always been the right strategy. We're not going to see a broad-based market like we have seen in the last 4 or 5 years post-COVID. I think it's going to be a more narrower consolidating market, and therefore there's going to be more challenging to kind of make money.
Okay, that's the word coming in from the expert today. But let's move on and talk about a sector that was down and out in today's trade. We've spoken about PSU banks. But other than that, you also had Nifty Pharma that took a knock in today's trade, a 1.1% cut coming in on that index. And that was feeling the pinch because US President Donald Trump announced the introduction of tariffs on pharma over the next 2 weeks. Let's go across to Varun for more details and why the sector was taking a tumble in today's trade. Varun.
Well, so Indian pharma companies are in pressure today, and once again the reason is Donald Trump, because first of all he has signed an executive order and the order aims at overall bolstering the domestic pharmaceutical manufacturing in the US. Now, the order says the FDA has to fast track the approvals for setting up the manufacturing facilities in the US and also has to cut down the usual setup time. Now, if you say the normal usual setup time for a pharmaceutical manufacturing unit in the US is around 5 to 10 years, and Donald Trump says that this is unviable and also it is unacceptable from a national security standpoint as well. The order also says that the Environmental Protection Agency, they have been tasked to help speed up the overall environment clearance for building up pharma plants in the US. Now, this will also help manufacturing facilities to actually shorten the overall time to set up the manufacturing facilities in the US. The order also says that it to raise the overall inspection fees for the foreign manufacturing plants, and also strict action would be taken against foreign manufacturing plants who actually do not overall live up to the overall expectations of the US FDA or do not comply with the rules. And also there would be surprise inspections, and also the FDA may publicly disclose the foreign facilities that fail to comply with the US standards. So these are some of the the things that have been covered in the executive order. Also, Donald Trump has said that in coming weeks, in 1 or 2 weeks, he would come up with the overall pharma tariff as well. So there are several negative news which are coming out for the pharma sector, and hence you are seeing this type of decline on the pharma stocks. But yes, remember this, that the executive order will actually not have a big impact on the generic companies. The companies which would benefit from the executive order of manufacturing would be the innovator companies. So that's the reason a big impact on Indian companies is actually unviable because of this executive order.
Okay, Varun, thanks for taking us through all of those details. Well, Indian Pharma was really in focus today and taking a knock, case in point being Abbott, Lupin, Zydus, Alkem, Sun Pharma, Dr. Reddy's, all trading with cuts of more than 1% in trade. But which were the other basket of stocks that were in focus? Let's bring on board my colleague Ravinder, who's waiting by with a list of just that.
Well, yes, Polycab is in focus, where company has announced its Q4 number, and company reported a revenue at rupees 6,986 crore, which was up by approx 25% year-on-year basis. And if we talk about EBITDA margin, then the company reported EBITDA margin at 14.7%, which was up by 106 basis point year-on-year basis. And company's wires and cable segment achieved a 22% growth year-on-year basis. Moving to next, Alembic Pharma were also in focus on back of Q4 result, where company reported revenue at rupees 1770 crore, which was up by approx 17% year-on-year basis. And company reported a net profit at rupees 162 crore, which was down by 2.5% year-on-year basis. And company margins also saw a decline of approx 200 basis point year-on-year basis. Moving to next, CG Power were also in focus, where CG Power reported its Q4 number, and the company revenue stood at 2,632 crore, which was up by 23% year-on-year basis. And if we talk about EBITDA, then company's EBITDA was up by 21%, but company's margin was fall by 27 basis point year-on-year basis. Moving to next, Bank of Baroda were also in focus, where Bank of Baroda has announced its Q4 number, and slippages ratio increased to 1% as compared to 0.9% quarter-on-quarter basis. And if we talk about NIMS, then NIMS came at 2.86% as compared to 2.94%, which was down by 8 basis point quarter-on-quarter basis. And NII was also down by 6.5%. At rupees 11,020 crore. And lastly, TCS were also in focus, where TCS launches GenAI and agentic AI powered TCS Mastercraft to help enterprise swiftly modernize legacy system.
Okay, Ravinder, thanks so much for taking us through all of those stocks that were in focus in today's trade. Let's talk about one of them in detail, and that's IHCL on the back of inline set of numbers, but the stock took a knock nonetheless in today's trade. 6% lower is the kind of profit booking action that we've seen on the stock. Now, demand will outpace supply for upcoming years. That's the word coming in from MD and CEO of IHCL, Puneet Chhatwal. He also believes India's journey of tourism contribution to GDP is just beginning. Let's go across and listen in to a little bit of what he had to tell Nikunj Dalmia earlier in the day.
For the next couple of years, it's absolutely demand is going to outpace supply. Definitely, it's not going to lag behind supply. So there are 3-4 reasons for it. The GDP growth numbers may be adjusted downwards, but still it is around 6%. Now, whether it's 6.4 or 5.9, it's still a good growth scenario given what's happening in the world. People are having higher per capita income, and the new, or what you call the nouveau riche people, want to experience more, whether it's your food and beverage, or it's your hotel stays, or it's your luxury goods. Everything they also want to have, right? They have always aspired to have that. So I think that also will benefit the sector. And finally, with all the new destinations opening, there is something new happening which people have noticed and had never noticed before.
Okay, IHCL seeing 6% cut. Another stock that was down 6% in today's trade was RailTel as well. Sanjay Kumar, the chairman and managing director at RailTel, he discussed the company's growth outlook going forward. And speaking of the Kavach system developments, he also said that the rollout is likely in Q3 of FY26. Let's go across and listen into what he had to tell us.
The composition of entire revenue is now, if you observe it, it is changing. So project revenue is continuously increasing, and that is why overall blended margin will certainly reduce. If you see the margins from project revenue continues to be in the range of 4 to 5%. So certainly overall revenue margin, it will make impact. So Kavach, the approvals in railways are still on. So as soon as the approvals, which are expected maybe by in Q2, and then we expect to get the rollout starting in Q3. If you talk about the overall order book, so we expect that this year we should clock around 25,600 kind of revenue coming in from the order book.
Okay, that's the word coming in from the management of RailTel. Let's move on to another stock that was in focus today. That's JSW Steel. Amid a falling market, the stock has ended in the green today, a 1.2% uptick coming in. That's because of the latest development in the Bhushan Power and Steel case. Because remember, after ET now reported that JSW Steel may move the Supreme Court against the verdict on liquidating the company, sources are now also telling us that lenders may also file a separate plea on the same. Ankur Mishra, who has been tracking this story since the beginning, is joining us with all the details. Ankur, take it away.
Yes, sources say that Bhushan Power and Steel lenders will move a review petition in Supreme Court against the order which was given earlier. Remember, this will be a separate petition whereby we also understand that JSW Steel is also planning to move a separate review petition. The two-member bench had earlier ordered that the liquidation of Bhushan Power and Steel should happen because the earlier implemented plan of Bhushan Power and Steel does not stand. In fact, the lenders will need to return rupees 19,700 crore as per earlier order, and after the liquidation the new bidders can arrive, but for now all the stakeholders have come into action. Earlier DFS Secretary also told ET now that lenders held a meeting with government regarding the same. Since all the stakeholders are involved, we understand that they will move Supreme Court staking claim on their part, while on one hand JSW Steel will say that they had followed the process as per IBBI. They have moved to different courts, but also lenders who may not want to return 19,350 crore because the money has already been paid to lenders, and that kind of provisioning needs to be done in this quarter if this order needs to be implemented. So all in all, first JSW Steel did plan to move Supreme Court, but now we understand even lenders are planning a separate review petition in top court.
Alright, Ankur, thanks so much for taking us through the latest update on that case. But DFS Secretary M. Nagaraju also commented on the JSW Steel Bhushan dealing, said that they are finalizing the response to top the court decision. Let's go across and listen.
I have already reviewed with all the banks, all the lenders, and we have taken a position. We have studied the judgment. We have got our advocates' views on the judgment. Now we take a view in the government. How do we approach the judgment? Okay, so we'll finalize.
Okay, and as promised earlier in the show, let's bring you an exclusive, an ETO exclusive on Zepto. Zepto's founders, led by entrepreneurs Adit Palicha and Kevalia Vora, are negotiating a 1,500 crore rupees structured loan to help them raise their equity stakes in the quick commerce startup ahead of progressing with an IPO proposal. Anurag Joshi is bringing us all of those exclusive details. Anurag, what are you picking up?
The Zepto founders are negotiating a 1,500 crore rupee structured debt to fund increasing their equity stake in Zepto, the quick commerce startup. AAA India Alternatives, which is the alternative unit of Edelweiss, is the lead underwriter for the transaction. And the transaction will be secured through a pledge of about 17%, which the founders are owning in Zepto. And AAA is already reaching out to private credit funds and is seeking to form a lender group for funding the transaction. Now the investors are eyeing an yield of 18 to 20% for the debt facility which the Zepto founders are seeking to raise. Zepto is a quick commerce startup. This was founded in 2021 by Adit Palicha and Kevalia Vora. Now the idea about raising this debt facility is for the lenders to use the proceeds to increase the equity stake to over 20%. And the whole idea now is to increase the domestic holding in Zepto to over 50%. The reason is that certain rules now related to investor-led model for quick commerce and for e-commerce also, they permit only Indian-owned and controlled companies that are owning more than 50% stake in the companies to operate the inventory-led model. Now, Zepto's founders have been working on this plan, and certain domestic investors, the investment firms, are also in touch with the foreign shareholders of Zepto to buy their shareholding towards this goal of increasing the shareholding to 50%. They plan to streamline the shareholding to over 50% domestic holding before the proposed IPO.
Okay, thanks Anurag for taking us through everything that you're picking up from your sources when it comes to Zepto. We'll of course keep you updated as and when the story develops going ahead. But let's talk about the new kid on the block today, and that's Ather Energy. Remember, it listed on the bourses with a premium of 2%, but the stock did pair those gains over the course of the trading session. As we wrap it up on this edition of Your Trades, let's go across and listen into ED and CEO of Ather Energy, Tarun Mehta, and what he thinks could be the growth levers for the company going ahead. With that, it's a goodbye from me and the team that put this show together. Thanks so much for tuning in.
At a volume of roughly about 10,000 units a month in FY24, we were trending at about minus 35, minus 36% EBITDA. We hit about 15,000 units a month in the last few quarters, and just that 50% growth has already taken us to minus 20 to minus 23% EBITDA. And I believe we're really just scratching the volume journey for us in this industry. So we believe volume for the industry, and obviously ours will trend very fast. On distribution, Ather had 260 stores pan-India in December. Our peers have been at between 700, 800, even 1,000 stores in some cases. All those stores many of those stores are in cities where Ather has not even opened its first distribution. Now, as we start unlocking that with our asset-light dealership model, we are very bullish on driving an incredible growth